This next panel, we're going to broaden the topic here a little bit and talk about FinTech in general and what relationship some of the trends in FinTech have with the adoption of digital assets. So without further ado, please welcome our moderator to the stage, Mr. Charles Poliakoff.
Hello, everyone. Can you guys hear me? Awesome. So I just want to welcome everybody today to this panel. I'm super excited about this panel because we have this sort of like unique collection of people with very broad and deep experiences across a variety of different industries and verticals. So I'm really excited to hear their perspective. Our panel is on FinTech and what advancements we may see in FinTech that'll lead to digital asset adoption. So before we actually dig in and go into some of these questions, I just wanted to kind of go through and do some quick intros down the line. Very quickly, I'm Charles Poliakoff, Fusion Foundation. We're a blockchain protocol focused on connecting financial systems, so specifically interoperability, and I think you guys heard DJ talk about time-based assets this morning. Angie?
Hi there. Sure. I'm Angela Dalton, Angie Dalton. I'm at Signum Global Advisors, managing partner of technology. We operate in the intersection of policy and technology and basically interpret what is happening in DC from a regulatory perspective and a tech perspective and try to translate that for institutional investors. And I'm also on the Wall Street Blockchain Alliance.
Hi, my name's Amber Balday. I'm co-founder and CEO of Clover. We're a startup building decentralized kind of infrastructure adoption tooling, so developer tooling and all the things that you need to actually make some of this stuff work, whether you're connecting to public networks or some of the permission networks. I'm also on the board of the Zcash Foundation, members of the Enterprise Ethereum Alliance, IC3, et cetera. I've seen several people here who knew me from my prior life when I led the blockchain program at JP Morgan, but that was ages ago, so we won't talk about that now. Thanks.
My name is James Pucher. I work for a company called TradeStation Crypto. We're an active trader, retail-focused active trader brokerage. I've been in this space under the TradeStation umbrella for about 37 years. We offer multiple asset classes, and our job now is to try to figure out how we expand our offering into digital assets.
My name is Nikhil Kalgadi, founder, partner of CoVenture Crypto. CoVenture is a holding company with 3 businesses. One of them is a crypto business. It's an asset management firm with quantitative strategies and systematic indices. And then we've got a credit business that is entirely outside of crypto, lending against niche asset-backed assets. And we've got a FinTech-focused venture fund as well.
We should plug your podcast.
And you should all listen to the Patrick O'Shaughnessy podcast, along with the Blockworks Group podcast.
Awesome. So, as you guys can tell, really great group of panelists. Before I kind of kick it off, FinTech is covers a very broad array of verticals, right? I'm willing to bet that if I asked 10 people here, if I literally randomly called on 10 of you, and I asked each one of you to tell me what FinTech means to you, you'd probably come up with 10 different answers. So what I did is I kind of like listed out a few verticals, and I want to go through some of these verticals, and then I want to better understand kind of like where advancements in some of these verticals could potentially lead to digital asset adoption. So I had to write these down. Within FinTech, you have lending, capital markets, financial services and infrastructure like Plaid, wealth management and investing, payments, processing infrastructure, digital banking, and trade tech. Nikhil?
Oh, man.
I'm going to start with you.
All right.
If you were to pick one area, right?
So since this is a complicated question, I'll give a simple answer. I think for the near term, trading is definitely the best application. I think that will absolutely change, but I think the digital asset ecosystem will grow as a function of the number of users, for sure. And I don't mind if it's trading, or if it's gambling, or if it's gaming, or whatever it is that gets the next 100 million users into the ecosystem. I think that's what we need in order to get there. So my prediction is trading for sure. I think it moves away from the BitMEX's and the Coinbase's version of trading, and there's a new form of gamified trading that someone doesn't need to know what going short or going long means in order to participate in this trading atmosphere before we move on to bigger and better things like payments and financial inclusiveness.
Did you read my notes? I think we're kind of biased in the sense that we focus really on access to markets, and I would echo that the most common use case right now is really around trading, but the big thing that we're really trying to adopt and change is access to the markets and making it through a familiar brand. So we do agree that access through the traditional exchanges, or what you know as exchanges today, is going to shift as more players come in that are reputable or have a more familiar name brand that you would know.
I think what matters is the types of problems that you're solving. And if you're looking at cap markets or payment rails or whatever, I worked on the DTCC project that Rob talked about earlier, then you're talking about if you're tokenizing those assets, then advancements in those specific verticals is going to make a difference. But really what we should be doing is helping people build systems that are more accountable to us, and in the kind of human usership space, maybe that means something like, why do we all use Medium for our blogs now? I know that doesn't have anything to do with the token, and so that sounds strange. But remember when people used to run their own blogs and they don't anymore, and we all use Medium? That is called centralization. And so when we talk about what decentralization means, it doesn't necessarily mean trading in some coin. We're talking about changing the power systems of the structures that we use. And so the things that will help make some of these coins more useful, if that's, I guess, the end game, which I really don't think is the end goal, it's going to be things that help users that are, say, I want to run a blog and I'd like to get paid to do that, to be able to actually accept that payment, not lose their bank account for receiving that payment, and then do something with that coin once they have it.
Yeah, so at Signum we're looking, we're trying to find what is taking mindshare of elected officials, and right now it's privacy. I'm originally from Kansas. I was mentioning I went into a senator from Kansas's office, and I thought I thought the office would say agriculture was number one. He said privacy. It doesn't matter what party, privacy is the number one issue right now in DC. So I think that there are some really interesting things happening at Facebook, ironically, or maybe not ironically, in that they are building, they're laying the groundwork at least to be able to use some, of this blockchain technology, even if it's permissioned and private, to be able to do some of the things that you're talking about. I mean, I envision a world where you see,
I'm
where
sure
you have,
Facebook is going to get it right this time.
yeah, I know we don't trust them, but I just think it is interesting that you could get to a point where if there is a Facebook token, one could imagine you click on an ad and you earn value from that, and you use that value to buy New York Times subscriptions, or use that value to tip video gamers if they release a video game platform like other platforms have. And then the other thing that I'm looking at is on the gaming front is just this melding of online and offline life and gaming and branding. And I think that tokens and crypto allows or provides two things: privacy, and brand ownership. And I think that in advertising, there is so much graft, and there is a real solution in blockchain.
Interesting. In terms of like regions, you guys are observing, you're seeing different things sort of evolving, different products, different sort of trends that are evolving. Where are you guys seeing in some of the regions potential, again, for advancement that leads to the adoption of digital assets? And the reason why I bring this up is, I always think back to like technological leapfrogging, right? Like if you go back to, the 80s and 90s, I'm gonna date myself now, right? You had countries that sort of circumvented telephone infrastructure and went right to cell phone infrastructure, right? Because it was just easier. So again, if you think about kind of like regions where there's potential for acceleration of adoption, how would you guys start to think about that? And I will start with you, Nikhil.
Let me jump on this grenade a little bit. Our business is backed by SBI Holdings, who is deeply involved. We have a joint venture with them as well. They're probably the most active financial institution in the crypto and digital asset ecosystem, about a $40 billion publicly traded financial institution if you're not familiar. But separately, I also used to work for Masayoshi Son and co. at SoftBank for most of my investing career. So Japan is a particular area that I think I know okay. And Japan, of course, in the world of crypto and digital assets was a pioneer. I would say, fell by the wayside when the FSA, the SEC equivalent, sort of said, hey, everybody, let's pause and see what the rest of the world does, and let's be followers instead of being leaders. But what is a story that hasn't been told in the media yet is the fact that in the next 3 months, MUFG, which is the 5th largest bank in the entire world, #1 in Japan as well, Rakuten, the Amazon of Japan, SBI, the E-Trade, Merrill Lynch, et cetera, of Japan, and someone else that someone will correct me on, another large banking financial institution and technology company, almost like the FANG of FinTech of Japan, are all launching crypto exchanges this summer, right? And it's really important to understand the impact of that. As you probably know, 35% of the fiat Bitcoin cross is in JPY, 38% is in USD, and the rest of it is the rest of the world, right? Wow. That's huge percentage-wise. But only 3% of Japanese people own crypto, compared to the 9% allegedly in America. So what that's saying is, imagine if Facebook, Google, Bank of America, and JP Morgan all said, everyone that uses us, you can now buy crypto. We are blessed, you're KYC'd, you have digital assets that you can purchase. And that all happens in the next 3 months. That's like the craziest, most bullish thing that I could imagine is happening right now. Nobody's talking about it. And that's specific to starting with Bitcoin and a handful of other things, but I think it very quickly expands to other traditional assets as well as digital assets and representations of traditional securities.
Yeah. Angie, I'd love to sort of jump over to you again, ask you a similar question in terms of like observations you've had. We had a chat earlier at lunch. We talked about a couple of things that you had seen. Maybe jump in from a regional perspective, some of the observations that you've had.
I mean, from a regional perspective, I focus mostly on the U.S., and I think the U.S. just has so much, needs to make a lot of advancement here. And I think that the Microsoft announcement a couple of days ago was pretty important because I did a paper for a client on self-sovereign identity, 6 months ago, and each of these, quote, competitors cited Microsoft as by far the leader in identity. And so the fact that they rolled out their, decentralized identity network on the Bitcoin, blockchain, I think is a really big positive, and that should, I think, lay the groundwork for a lot of advancement in the U.S.
Great. Quick question regarding sort of what we read. So James and I, about, 2 weeks ago, we had a conversation about a white paper that the World Economic Forum had written. And I'm just going to pull this out because I want to reference it. The paper was called, I'd love to hear just show of hands here, how many people have read this? It was called Our Shared Digital Future, Building an Inclusive, Trustworthy, and Sustainable Digital Society. How many people read this paper? All right. So one of the things we really liked about this paper, and I'm going to quote it, so I'm going to read again, I apologize, but new technologies to sense, process, and act upon information at scale that can drive economic growth and inclusion, empower individuals, spark innovation and entrepreneurship, improve health outcomes for all, and enable a step change in our ability to tackle shared societal challenges, such as the Sustainable Development Goals, with the potential to raise billions of people out of poverty. So I hear this, and to me, this opens up a whole new slew of opportunities, right? And they listed some shared goals. And these goals were pretty ambitious. Leave no person behind. Empower users through good digital identities, right? What you just brought up. Make business work for people. Keep everyone safe and secure. Build new rules for a new game. And break through the data barrier. So, Nikhil, sorry, complex question.
Man.
I'm not gonna start with you though. I just wanted to
Next
apologize
time I'm not
to you.
sitting on the end though.
I actually want to start with you, Amber. You and I have had conversations about data, about leapfrogging, about empowerment. We'd love to hear your views on that paper. I think you've read it as well.
It's going to give me a puppy too, right? Well, I'm actually on the World Economic Forum's fourth industrial revolution advisory board, so I definitely support their goals and what they're going for. But a blockchain is a data structure. So it's not going to solve those things on its own. You know, one story one of the stories we were talking about earlier is an organization called Grassroots Economics that has been operating initially in Kenya, but now in several other countries adjacent. And they were working in these kind of closed loop economies that were struggling due to fluctuations in the national currency. There was currency scarcity and too much volatility for the local community. But they had a strong web of trust amongst themselves. And so, the school owner trusts their teachers and has the same barbers and grocers, right? They all have this community. And so they started creating their own currency. And this did not involve a blockchain. This was like a decade ago. But they issued it on paper, and they've now since tokenized it because in that case, a blockchain does add an additional sense of security and provable, verifiable scarcity to the same network, but they're solving an existing local problem that they had. And I think that on the ground, those kinds of things can absolutely address social challenges. What becomes concerning is when you have something like, we're going to give all refugees IDs, and you have no idea who holds the private keys, right?
I think what's important in all this is that there's a big movement happening, whether or not you believe in blockchain or digital assets. There's a backdrop around the world of digitization and the movement towards the industrial revolution, as you were commenting on. The World Economic Forum projects $100 trillion in value created over the next 10 years. That's not just blockchain, that's overall in all industries. Blockchain, and I think at the center of this really is money and how we're going to transact value back and forth. Blockchain is absolutely getting a benefit out of this, and it might be a piece of the puzzle we tend to think is going to be one of the areas that will be successful in the long term. That's where we're focusing a lot of our attention there. But it is really important as a backdrop of a macroeconomic trend, sort of lifting all the ships towards digitization.
So I'll take the contrarian opinion. Blockchain is good, blockchain is good, blockchain is good, I get it. But there's a lot of privacy concerns that come about when you're monitoring how governments say you should be spending your cash, right?
Dubai wants to move identity to the blockchain, right, by I think 2021, right? I think that's the initiative.
And I think there's a lot of risk associated with that. So I think if we're talking about what is going to be mass improvements from all of our companies being successful, for me it comes down to financial inclusion, as opposed to data protection, as opposed to improving health outcomes. I think all those can come, but I see a lot of missteps that can happen along the way there, more so than if there's a misstep on financial inclusion, it's basically allowing people that are already wealthy and have access to make more money, right? The misstep there is not penalizing people and sharing their personal health information with people that shouldn't have it. You're just, frankly, more continuing the trend that we already have, which I'm not saying is good, but it's better than alternative worse outcomes.
Right.
So for me, the financial inclusion is by far the obvious win that we can have. In order to do that, you're going to need companies like yours and businesses like mine that basically say, hey, we need to have, and companies like Abra that basically say, look, you don't need to have a pre-existing relationship with JP Morgan, right? You can have this digital asset, it can be a representation of Apple stock, and people can get their first exposure to investing and saving, which I think is worth, that can barely be taught in America.
Yeah, it's a very important point that as we start hearing more and more about a cashless society, that doesn't mean like, oh, we're all using a cryptocurrency society. That means that you just use your credit card and every single transaction is reported to an institution, and it becomes harder and harder to use cash, and that cash is actually disappearing and physically removed from the market. It's over 90% complete in Scandinavia. But if you think about things where you would just grab $10 out of your pocket, if that simply wasn't an option anymore, then publicly accessible cryptocurrency becomes your only viable cash alternative. And there are specific times, like, our First Amendment freedom of association theoretically says that you should be able to donate to your church or to your, political group of choice without interference or having a chilling effect by people knowing what you've done. And it may become impossible in a cashless society without these sorts of cryptocurrency alternatives.
Yeah, I'd just love to add a different take on this, which is that ESG funds, environmental social governance funds, were kind of 10 years ago called socially responsible funds, and it was where the portfolio manager who didn't generate a lot of alpha was kind of sent to run the fund that had fewer stocks in it or fewer instruments in it, and people thought, well, it's not gonna perform anyway, so might as well put that guy on it. Now in Europe, it's a real thing, and it's generating real alpha, and it's also, there's a cultural, kind of demographic shift, and people care about provenance. And I think that now that we've seen it work in Europe, and we've seen, asset managers actually raise money on this, I think it will come to the US, and I think that'll benefit, especially big companies where it used to be all we cared about as an investor was the end. Now we care about the means to the end. Now it's not about buying the cheapest toy for my kid from Walmart. It's about the fact that I don't want, I have a 7-year-old daughter. I don't want that toy to be made by a 7-year-old in another third world country. So I think that shift in mentality is going to change investing, which I think is going to benefit the space.
You have to look at generations too. The Gen Z group is so concerned about social responsibility. They're terrified that we're destroying the world, and there's some angst on the way up as you climb the generational ladder. So without a doubt, it's going to shift the way that we deal with investments and lead the way forward.
Yeah. I want to talk about data for a second. I think, Amber, you brought up the point about data.
Sure, always data.
So,
Data's great.
if you think about, there's been talk about bringing data back to the hands of the user, right? You have different data factions. One of the things everybody talks about blockchain is like this promise of like data transparency and bringing data on. But like the reality is you look at like the way we think about PII in Europe is probably different than the way we think about PII in the US. You have these data factions, these different interpretations around data rights, and yet you also have this promise of like blockchain. If I own my own data, what can I do with it, right? So we talked about Facebook a little bit before, Angie, but like, if I own my own data, does that mean I have the right to potentially license it in the future, right? So instead of like just sort of allowing these third-party data vendors, right? Everyone knows about empirical research now and alternative data. It's become a real thing in like the buy side and the sell side. But instead of like this data being sort of like taken from me by third-party vendors and being resold everywhere, is there an opportunity for me now to own that data and as an individual possibly even monetize that data? So I'd love to just kick it off with you. And there's a lot
this
there.
This is like an hour conversation,
Yeah.
but I will keep it extremely brief if I can. So sure, we're generating data all the time, and you could be owning it if you were keeping your own copy of it. What are you going to do with most of it? We used to own all of our data. It was when we ran like programs on the computers that we owned in our houses. I don't know if you remember that, but do you remember installing things? And then you would open a file, and if that file went away, it was gone, but you had it, like that was your file. That was called owning your data. And so as we've kind of moved things to the cloud and moved to this like software as a service model, we've simply changed the ownership model because of the convenience that it's afforded.
Convenience.
And now what we are seeing is some wonderful technological advances outside of the world of blockchain, which does exist, in the areas of being able to use things like WASM to run full applications in your browser, all different kinds of other changes up and down the tech stack, but that allow you to get the experience of that like hyper seamless cloud experience, but it's actually running locally on your machine, but accessible from multiple devices. Then you can start talking about bringing the application to your data rather than sending the data away to the application. That said, that's not going to solve everything. It's like we've just given up as people that the vendors that we work with have any obligation or incentive to work with us. Right? Privacy is the freedom from intrusion, but confidentiality reality is what is done with the data that you selectively disclose to someone. And I need to share this data to get business done. I respect or I expect that you are going to honor the agreements that we have around that data. The problem is we have no agreements on that data, and it is being sold into alternative data feeds. So we need to address that legal and other situation before we start saying zero knowledge proofs have to solve everything. That means we've given up.
But do you think enough people care that we need to change this?
I think a lot of people are starting to be really displeased with the third-party data market. They just don't understand the small tip of the iceberg that's even in the news at this point. It's like this ship has mostly sailed.
Oh, it's terrifying what you can do with marketing data.
Yeah.
And I also think that there's this narrative that people don't care about privacy. I think they don't care about a contractual agreement for advertising, but I do think they care about losing control of their whatever.
Contrarian view?
Let's see. I promise I might give them all the contrarian views.
It's better than the Game of Thrones theme we talked about.
You never know. I still want to know who the Arya Stark is of crypto. Hopefully we'll come to that one toward the end. No, on the data side, I think you heard my 2 cents on the dangers and the risks associated with it. I find that most consumers don't care today to pay for privacy because they haven't really seen the effects of it. They haven't felt it personally. There's a lot of talk about privacy. People say they care about it. Nobody's willing to spend money on it. So that seems to me that they're not not putting money where their mouth is. I don't know if that will change. I assume it will change when somebody gets screwed over.
I don't think you can sell privacy as a product.
Right.
I think you have to give privacy and security as background wins that the user does not know is happening for them. I mean, most people did not meaningfully transition over to using HTTPS all the time, right? But silently in the background, as Let's Encrypt offered free SSL certs, now probably over 80% now of the web runs over HTTPS, right? And users didn't do anything. So it can be solved in the design stage as well.
So I think, if I would jump in on top of yours. So I think if people aren't willing to pay for privacy, what they are willing to do with their data is monetize it, right? And so the world of digital assets to monetize it hasn't even really started yet. But there's companies out there that don't operate in the digital asset world today that I think are creating massive, massive opportunity with this digital data. So a good example is companies like Carta. Carta, raised a massive round recently, multi-billion, $1+ billion valued company, and they just manage your cap tables for your companies. That I think is a massive amount of digital data, right? If I knew every single company in this audience's cap stack and all the qualified purchasers and institutions that invested in you, I could create a little marketplace around, Digital Asset Summit for secondaries, right? And I could do that instantly, and I could monetize that so easily. Doing that across the entire world would be a business line they haven't even started yet, but would be worth a multi-billion-dollar asset. What's the company in Silicon Valley that basically offers you to buy your home, and they'll say, hey, I'll buy it for you within their neighborhood.
Yeah, I know who you're talking about.
Nextdoor. Yeah. It's called Nextdoor, right? Multi-billion-dollar company. Fantastic. If I could have an accurate price using technology to determine of everyone's home, that I knew I could sell it somewhere else, again, you'd have the same unbelievable repository of information where an individual says, wow, I finally know the real actual value of my home.
Yeah.
Now they could get a loan against it, right? They don't have to just sell it.
There's no way to generate, the only companies that have the ability to price that kind of personal data are the existing MarTech companies, like the existing ad tech companies that already have the data and therefore can price it. It is a very difficult challenge to do that sort of pricing locally in a way where it's only running on your data. You have to know everybody's data, so you can't do it in a private way. I mean, I've seen a lot of these people that want to tokenize all your data and sell it, and I hope that somebody figures out how to make it work. I think what is a much more interesting or near-term solvable solution, and near-term is still a number of years, is in the business arena being able to derive the same kind of business insights from data that you do not necessarily own, right? So a number of small companies can share data to train machine learning models, for example, without actually having to share that data. that kind of stuff is feasible, is powered by new cryptographic research, hasn't really been done before, and is going to be a massive business opportunity. Doesn't necessarily need a blockchain.
I was just going to add that we just did a trip to DC to talk about this issue of users, and we all just pound the accept button as fast as we can. We don't understand what we're accepting, and I think that the mantra from DC is going to be notice and choice is no longer a choice. It is not the responsibility of the user. It's the responsibility of the technology platform, because you might accept that initial, I'll trade the free, I want the free service, I'll give you my data for advertising, but then it gets sold and sold and sold and sold multiple times and you don't know anything about it, and that's what's not right. And I think that, you also look at the stocks. Over the last 3 years, there have been, 5 fines. I looked at the stocks the day before the fine was announced to date. Every one of those stocks has outperformed the market since they've had these multi-billion-dollar fines. These are not even, they're not speeding tickets, they're not even parking tickets for these big companies. So the onus needs to be on them to change their business processes to protect users.
We're all kind of moving towards an area where we are doing our side hustles, and we want to try to monetize the activities that we're doing on a daily basis. Look across FinTech, and it's beyond just data. There's things that I can earn stock from swiping my credit card or my debit card, just things I can get healthy, I can get paid. So we're starting to find ways to empower individuals to earn through their daily activities. I think that's going to drive more of the acceptance and the requirement that, hey, I can earn on my data, I want to take that opportunity. I can earn driving Uber, or I can earn getting healthy. That's the stuff that we as individuals can sort of push this industry forward.
Yeah, folks have certainly been talking about that for some time. And again, I don't know if blockchain will help to enable that, or digital assets, or encryption. And again, we had a debate about whether or not we need blockchain, and we won't devolve into that conversation again. But it's certainly a topic that folks are paying attention to. We don't have a ton of time left. I did want to briefly talk about Flexa and Spendin, but there's no N between the E and the D, and what Galaxy Digital have done with payments. So I'm sure you guys all saw that announcement, I think it was a couple of days ago, that I can now walk into any Nordstrom, Whole Foods, even Starbucks, and digital payments are seamlessly integrated into point-of-sale terminals. And that's really important, because if I'm your barista, I have no idea you just bought that coffee with a Bitcoin. So does something like that, Akil, I'll start with you, does something like that lead to sort of like adoption of digital assets, or is it still kind of like a novelty where it's, a quick question, how many people here would go to Starbucks tomorrow and like buy a cup of coffee with a Bitcoin if they could? 3. So maybe answer the question already, but
yeah, a highly volatile asset class makes for a shitty, payments infrastructure, right? And there's no question about it. But so when the news came around, we all sent it around the firm. I'm sure you guys did too. It's, very, very, it's a good first step, right? I think the percentage of payments that happen in crypto are not going to move the needle anywhere near where we want them to, but it's nice that they accept it. That's cute. Where it could be kind of interesting is, imagine you're traveling abroad and you realize, oh, I can whip up my credit card, and now you've got an overseas payment fee. Actually, it might be cheaper, far cheaper, to pay in Bitcoin that day than it is to pay on your credit card. So I do think there is an application today. It just may not be perhaps this room, where that will have a material impact on people's decisions. So I think it's a first step, but in order to do that, you're going to need to have a card that automatically does it. You're going to need to educate those people that they can do it. I think there's some years or months before we start seeing Visa and MasterCard feeling affected by crypto payments.
That's really kind of, Amber, that's how you kicked it off earlier. It's like, what problem are we trying to solve? Right? If we're trying to solve for high fees for overseas charges, and there's an opportunity to leverage this infrastructure, this technology, and it's a seamless integration, well, maybe that does, in fact, accelerate adoption. All right, we don't have a ton of time left. I was supposed to take 10 minutes for questions, but of course that went over. We have about 5 minutes left. I'd love to ask the audience if anyone has any questions for any of our panelists. In the back, do you have a microphone, or? Sir. Yeah, please.
Okay.
So we're having a bit of a hard time hearing you. Were you able to
I
pick
heard
it
a
up?
number of keywords.
I heard privacy as a default, so.
Privacy as a default, anonymity, and that was probably.
I'm glad it went to you.
So what does that look like? Yes, I think that application designers always have a choice when you're building something, right? Opt in or opt out. And you can always turn on the option for your user by default that you're not going to collect this information and let them know that if they'd like to share it, they can. One of the other problems that we have that is very challenging is that, especially in the startup world, you are driven by these metrics that you're like compelled to just like churn out this data all the time about your user base. And you get the idea that if you just have more and more data, you can prove how well you're doing. And if, you know, there's actually a company that there's several companies that they record all of the browsing sessions that happen. Every single user session is video recorded, and then you can browse them back so that you can see like why it is that they equivocated over the button. Did it not hover fast enough? And it's sold as like a usability thing, right? But it's 100% of your shopping session was recorded. And do you care, I guess, if you're just browsing dresses? Maybe not, but it is an oddly invasive thing. And so again, it's this incentive structure that we have in business that, you know, right now I'm kind of working on this thing that runs fully locally in your browser. And people ask me like, well, can you tell us how many people downloaded it? I'm like, nope. Like, that's the point. Like, I don't know. Like, you don't actually even need an account. You can generate a key and you can do it, you can take it and you can go, just as if you had downloaded the software off GitHub. There, you know, we can package that and make it as easy as if you had the technical skill to do it privately yourself. And that's the difference, is that the less technical skill that you have, you pay for that with your privacy. And so to your anonymity point, yeah, it's relatively trivial to de-anonymize most of these data sets. And the more you kind of use the same logins and use social logins and use the convenience of that, you really have no anonymity.
So I'll add to that, but I'll take.
That added the keywords.
I'll take the non-retail and consumer angle, and I'll go to sort of the B2B kind of answer. So I think that the $31 billion of venture capital that went just into FinTech in 2018, right? It's a 2.5x increase over 2017. It's an extraordinary amount of money going into FinTech venture capital globally, right? A lot of these are big businesses that are servicing B2B. They're not direct-to-consumer FinTech companies, right? It's Ant Financial, right? Not, PayPal's consumer product, right? So, the data that is in there is largely controlled by large centralized parties, Google, et cetera. It would be amazing, and what I think is going to be jumping it from 31 billion to 300 billion is these companies, large companies and mid-sized companies, being able to control a lot of that data and be able to monetize it off platform. So what do I mean by that? You own a home, you put it on Airbnb. Does Airbnb own all your data associated with your sales and rentals? Probably. Wouldn't it be amazing if you could take that information and then start to maybe, I don't know, lend against it? So one of the companies that we lend a lot of capital to is called ClearBank and does exactly this. And they basically said, hey, you own 30 homes or rent them out. You go to JP Morgan and you say, I own 30 homes, give me a line of credit against the equity. They say, okay. You say, I've got 30 homes on leases, I want to put them on Airbnb. They'll be like, well, go away, I don't understand what you're talking about, right? But that's basically the same business, only you have way more information about rentals, repeat history, how much money is coming in, and you should be able to actually lend against it. That should be your data, not anyone else's.
Awesome. All right, we'll take one last question, and then we'll likely go a few minutes over. Way in the front.
So, quick question, combination of your comment and Amber's. So the UK is going to have this unique little thing about logging in for porn. Effectively, that means the government's going to own your identity. They're going to keep it on a blockchain, and they're going to be able to track your entire data lineage. What do you think about it?
That's bad.
Contrarian view?
Glad I don't live in the UK.
Yeah, I mean, I was going to kind of just tag on to that, so maybe it kind of adds on to this a little bit. But when we talk about taking back our data, it's interesting in some of those terms of service that Andrew is referring to us clicking the accept so quickly on. You can't just take your data. You can write down what you put in the application before. You can use the APIs that they've provided in some instances, assuming that you know how to do that, to access the data at the rate limit that they will allow you to take it. You cannot usually screen scrape the data into your own database. So you can move away from Airbnb to a different platform, but now you've lost the discoverability of the rest of the community of Airbnb. So we need to restore what was called adversarial interoperability back in the 90s when things were open and we had, like, remember RSS and you could, like, put together your own feed reader? Amazing. I mean, the technology exists. But, you know, using your data to create my search engine is innovation. But once I become big enough, then you using your screen scraper to read my search engine is fraud. And that is a change in the laws that has come at the behest of the large tech companies over the last 15 years. And it's some of the reasons that we should be looking more closely at some of the regulation targeting, specifically Facebook, Google, et cetera.
Awesome. Well, like Anthony earlier, my clock went from negative numbers now to positive numbers again, which means I'm now going over. So I do want to thank the panelists very much. If you guys would give these guys a round of applause. Nikhil, James, Amber, Angie. Thank you so much, guys. Everybody enjoy the rest of the summit, and thank you to Jason and Michael for putting together such a great event. Thank you, guys.
Thanks, everybody.